Good evening, everyone. So, today I'll be presenting on Mass Financial Services. It is basically an NBFC providing retail financing services in India. Their vision is to be one of the most efficient distributors of financial services and create value on a very large scale. Let's begin by knowing the company. So, Mass Financial was founded in 1995 by Mr. Kamlesh Gandhi and his late brother Mukesh Gandhi. Kamlesh Gandhi is currently the chairman and managing director of the company. The company is headquartered in Ahmedabad and they have been in the business for around 28 years. And Mr. Gandhi started the company with a vision to provide financial assistance to small and medium-sized enterprises, SMEs, and entrepreneurs. In the late 1990s, they shifted their focus to microfinance, which involves providing small loans to low-income households and micro enterprises. This decision was based on their belief in the potential of microfinance to create sustainable livelihoods and alleviate poverty. This is very interesting because during that same period, the government was also trying to implement poverty eradication measures in their 5-year plans, etc. And then over the years, they have expanded their product portfolio to include a wide range of financial products and services, such as micro enterprise loans, small business loans, vehicle loans, home loans, etc. So they have more of a customer centric business model that emphasizes responsible lending practices and social impact. Their credit appraisal process is designed to ensure that loans are given to borrowers who have the capacity to repay, and the company provides financial literacy training also to their customers to help them make informed financial decisions. This is mainly because they also lend to rural and then low income households, etc. So they do need to have these kind of training sessions, etc. They have a core team of more than 35 employees and more than 2,000 employees who work towards accomplishing their vision and mission, and they have received several awards and recognitions for their contributions to the microfinance sector in India. And they've also been recognized for their focus on financial inclusion and their efforts to reach the underserved segments of the society. So basically,
Shantanu,
yeah,
sorry to interrupt. Your slides are not moving here.
uh, I'm not doing anything. I'm just
Ah,
talking actually as of
okay.
now.
I'm so sorry to interrupt you. I thought that you were giving this information on the basis of
No,
slides. Sorry.
no,
Sorry to break your flow. Carry on.
no, it's all right. So they have a strong track record basically of providing financial services to the underserved communities in India and to new entrepreneurs, etc. And they have continued to expand their reach over the years. Now, yeah, these are some of the investments that they raised over the years. Like, say, they received 6.5 crores from Bellwether in 2006, then 43 and 40 crores from ICICI and FMO in 2008, then 65 crores from DEG in 2012, and then 35 crores from Motilal Oswal in 2018. Now let's move on to their shareholding pattern. As we see, 74 is the are the slides moving now?
Yeah, Shantanu.
Okay. So as we see their shareholding pattern, majority of the stake is held by the promoter and they have not pledged any percentage of shares. So 74% is held by the promoter. The rest is held by DIIs and FIIs. So the promoter group, they hold more than 50%. So it's a promoter driven company. And if there are some investors, key investors in the company, such as Motilal Oswal, Axis, IDFC, Tata, AIN, PGIM, etc. And if we see the promoter shareholding pattern, majority of it is like it's more of a family business. So this Shweta Kamlesh Gandhi is his wife. She holds 30%. Kamlesh Gandhi himself holds around 11.6%. His children hold 0.08%, and then his brother who passed away, he held 30%. And the two companies also, these are also companies where Mr. Gandhi is like the director and the designated partner. So some percentage is held by these two firms. Now, moving on to the DII holdings, these are the companies that hold shares. Vistra ETCL, it is a PE firm, so they hold around 7.4%. Axis holds around 5%, and then IDFC 3%, etc., etc. So, and then moving on to their subsidiary. So they have only one subsidiary that is for their housing finance and mortgage segment. It is called the Mass Rural Housing and Mortgage Finance Limited, MRHMFL. So this company has a norm of around 400 crore rupees, and they consider it as a key contributor in the future to their entire arm. So if we see the shareholding pattern of the subsidiary, we see again it is so this is a publicly uh, unlisted company, and no PE firm obviously has any shareholding in the company. It's all held by the same family. So 60% is held by the parent company itself, Mass Financials, and the rest is held by the Gandhi family. Now moving on to their business. Sorry. Uh, so they have housing loans that is done through their subsidiary, then two-wheeler loans, MSME lending, car and commercial vehicle loans. So they offer different types of loans for two-wheeler segments, industrial machinery, properties, agricultural use, commercial vehicles, and insurance products as well. And they serve again small and medium enterprises in India. So they have five products in. Let me. Ah, so they have five products in their own portfolio. This is the portfolio for Mass Financial. The housing one will come differently. And they have seen growth across all of them basically. The standalone arm was around 7,600 crores for the latest quarter, which is a 32.3, around 32.46% growth from last year. And if we look at the configuration, the same applies to the uh, each segment. The micro enterprise loan has increased by 31.39%, as we see, from 2,875 crores to 3,777 crores. SME loan also has grown by 25% to from 2,274 crores to 2,840 crores. Same with the two-wheeler segment, it has grown by almost 38.22%. So these would be their top three segments. And additionally, they have also launched their latest segment called salaried personal loans. So this has recently just been launched. So it does not really is not a key contributor, but they're doing fairly well with it. 195 crores of the total loan. So if we see over the years also, they managed to increase their basically consistently. Even the if you see the past 2 decades, they have been increasing the consistently. And in 2021, obviously the economic slowdown, COVID, etc. But they managed to jump right back up, and now they are at 7,600 crores. So quickly, just let's look at their housing finance, that is the subsidiary. So they have grown the OM to around 400 crores. That is a year-on-year increase of 30.6%. So even here, they're doing fairly well, and in the future, they expect it to be a key contributor to the total OM of the entire company. Now moving on to their geographical presence. So it is obviously based in India, and it operates in several states across the country. They have a strong presence in the mostly in the western region of India, particularly Gujarat, because as you see, they have 60 branches across the state in Gujarat, and they have a presence in multiple states, other than Gujarat. There's Maharashtra, Rajasthan, Madhya Pradesh, Tamil Nadu, and Karnataka. So they are more about focusing on the underserved and unbanked customers in semi-urban and rural areas. That's why they have around 149 branches and 7,900 customer locations. And how they reach them, I'll come to it later. They basically have NBFC partnerships with around 151 NBFCs. So next is the board of sorry. Next is a few rewards and recognitions. So this Associam, it is basically associated with green building certifications for companies, etc. They won an excellence award from them, and then inclusive finance award in 2020, then best customer service provider in 2020, then most socially responsible NBFC award in 2019, and fastest growing mid-sized company award by Business Today in 2019. Now, moving on to the promoter and board part. So, we'll talk about the board of directors. Sorry, just give me a second. I'll just have a sip of water. Yeah. So Mr. Kamlesh Chimanlal Gandhi, he's the founder, chairman, and managing director of Mass Financials. So he's also a director for their subsidiary, and he founded co-founded Mass Financial Services with his brother, late Mr. Mukesh Gandhi. who was the whole-time director and CFO of the company until he passed away in on January 19th, 2021. Mr. Gandhi, he had started his career as a sales executive in the textiles industry. He has over 30 years of experience in the financial services sector. He started his career with the IDBI Bank in 1984. He has held various senior positions in the IDBI Bank, and he was also the head of IDBI's Ahmedabad regional office before leaving to start Mass Financial Services. He's also a member of lots of organizations, important organizations such as the Banking and Finance Task Force of Gujarat Chambers of Commerce and Industry. He's also the chairman of Gujarat Finance Company Association, then co-chairman of FIDC, etc., etc. It's mentioned here. And now let's move. And I'll talk about him more later on, about his backstory, etc. But now moving on to Mrs. Darshana Saumil Pandya, who's the executive director and CEO. She has over 25 years of experience in the financial services sector, and she too started her career with the IDBI Bank in 1987, and she has held various positions in IDBI, including as a senior manager in the corporate finance department before leaving to start Mass Financial Services. And sorry, not start, before joining Mass Financial Service. So she joined Mass Financial Services in 1996 as a junior executive, and now she's the executive director for Mass Financial and their subsidiary. She holds a bachelor's degree in commerce from Gujarat University. She started a yeah. So sorry. Now moving on to Mr. Bala Bhaskaran, who's an independent director. He's a management graduate with 2 decades of experience in the consultancy and financial sector. He has a number of management consultancy inputs from his rich experience. He has done his engineering from IIT Madras, MBA. He has an MBA from IIM Bangalore and a CFA from ICFAI. In the past, he occupied the position of corporate planning officer at a company called Jyoti Limited, he was a development officer at Bihar State Credit and Investment Corporation, and also has been a senior manager at the overseas cell of Gujarat Industrial Investment Corporation Limited. Now, Mr. Chetan Ramniklal Shah, he's also an independent director. He has over 33 years of experience in the financial services sector and has worked with various leading financial institutions in India. He has expertise in the areas of credit risk management, operations management, and business development. At Mass Financial Services, he is responsible for managing the company's operations and ensuring compliance with regulatory requirements. He holds bachelor's degree in commerce and law from Gujarat University. He is also a qualified chartered accountant, registered with the Institute of Accountants of India. He was previously finance manager at the Nagpur Cooperative Bank and finance manager at Cooperative Bank of Concord. Then Mr. Umesh Rajnikant Shah, who's also an independent director. He's also a chartered accountant. He has more than 35 years of experience in the diverse fields connected with finance, accounting, auditing, and taxation. He also has 5 years hands-on experience of working in an NBFC. And then Miss Daksha Shah, she is an MBA graduate from IIM Ahmedabad, who specializes in finance and marketing, and she has also been a student of economics and statistics. She has a rich experience of more than 3 decades in diversified fields of textile, chemical, and financial services. She has undergone various courses, such as the course in microfinance at the Economic Institute, Boulder, Colorado, in USA. She started her career as a teacher, and then she joined her family business, which was basically involved in trading and investments. So now she's also on the board of 11 other companies, and in her past career, she occupied the position of managing director at Pahal Financial Services Private Limited, and she was a program director at Vikas Center for Development. Now moving on to the awards and recognitions. So I could only find info about these two, that is the chairman and the director and CEO. So Mr. Gandhi, he was named the Entrepreneur of the Year at the 2019 edition of the Economic Times Awards for Corporate Excellence. They recognized him for his leadership and entrepreneurial skills in building mass financial services into the leading NBFC it is today. Then he was named the best CEO in the NBFC microfinance category at the Business Today KPMG Best Bank Survey in 2019. Then Mrs. Pandya, she was also named one of the most powerful women in business by Business Today in 2019. And then she was named the Women Entrepreneur of the Year at the GCCI, Gujarat Chamber of Commerce and Industry Awards for Excellence in 2018. So this was basically because of her contribution to the development of the financial services sector in Gujarat. And then she was named the Outstanding Women Entrepreneur at the FLO-FICCI, that is the Federation of Indian Chambers of Commerce and Industry Awards, a ladies' organization awards in 2016. Now, moving on to a few interviews, I could not find interviews of the other people on the board, but I found three recent interviews that of Mr. Kamlesh Gandhi. So he has basically given interviews discussing the company's performance and growth plans, etc. If you see all these three interviews, you kind of make out that he's a calm and composed guy and precise with his words, etc. So if you see the first interview, he talks about the OM growth and future growth levels, and he's pretty optimistic about it. He says that the compounded annual growth, which will be around 20 to 25%, which it is, and then he also says that they plan to achieve an OM of 10,000 crores by quarter 3 or quarter 4 of FY24. In the second interview, he talks about how their company is not much affected by the sudden hike in interest rate that happened in 2022 due to RBI's new monetary policy. So he says that their companies did not get much affected back then because their borrowing is MCLR based and not EBR based. MCLR is in marginal cost of lending rate, and EBLR is external benchmark lending rate. So basically, EBLR is more of a floating rate kind of thing, floating rate concept, and they're repo based linked rates. Means that whenever RBI will reduce the repo rates, the whole like benefit will pass directly to the customer. Whereas MCLR, what happens is the marginal cost of lending rates are fixed by the banks. That's exactly why they weren't affected by the sudden hikes in the interest rates. So in the third interview, he basically talks about yeah. In the third interview, he talks about restructuring after the COVID period and their OM growth and borrowing patterns, etc. And he also talks about how their how their wheels portfolio will take time to grow as the economy normalizes. So and then he also talks about how his vision was to create a financial institution that would empower entrepreneurs and help them grow their businesses, etc. So it was also mentioned that before co-founding Mass Financials, he had a background in business and entrepreneurship. He started his career by joining his family business of manufacturing PVC pipes, and later he ventured into the textile industry, etc. So moving on to the promoter holdings. Sorry, not promoter holdings. So, in the board, only Mr. Gandhi, as a part of the board of directors, only Mr. Gandhi and his late brother hold a share percentage in the company. Other than that, no one does. So, as we discussed earlier, he has an 11.60% share, then his wife and his children too. Then also the other two companies he's a part of, a designated partner and a director. And then his brother, he played a major role in bringing the company to its present level. But yeah, so he was associated from 1995 to 2021. He has around 30% in the company. Now moving on to risk mitigation and underwriting. So the ILFS crisis, basically, I tried to study what happened to Mass Financial and how they were affected during this crisis. So the crisis happened in 2018, and it was out in the open around August 2018. Everyone knew about it. So the company actually performed pretty well during the crisis. Their performance was stable. Yeah, there were certain things that got affected, but yeah, we'll go into it. So how did they manage to perform well during this period? So that are basically divided into four different parts. So one of the reasons for the stable performance was their conservative lending practices. They focused on lending to customers with a good credit history and a stable source of income. So their loan portfolio was also well diversified, with no like single sector or borrower accounting for a significant portion of the total loan book. So this diversification basically helped them mitigate the risk of defaults during the crisis. So the second is their strong ALM, asset liability management framework, which helped them manage liquidity. Liquidity crunch was one of the main problems during this crisis. So it helped them manage liquidity and interest rate risks effectively. And during the crisis, they raised funds through various sources, including bank borrowings, commercial paper issuances, securitization, and this enabled them to maintain adequate liquidity levels and meet their funding requirements. Then proactive management and reduce exposure to risky segments. So their management took proactive steps to manage the impact of the crisis. The company like tightened their credit underwriting standards and reduced exposure to risky segments such as builder finance. They also improved their collections and recovery process to minimize the impact of defaults. So talking about the financial sorry. Talking about the financial performance, I basically consider 3 quarters to kind of explain. So this crisis, the effects were seen in September of 2018. Um, and in quarter 2, this is the quarter 2 FY19 is the quarter that ended in September 2018. So we kind of get to see the effects, and then I've also considered the quarter before that to kind of compare, and the quarter after that to see the consecutive effects of the crisis. And yeah, so the company's financial performance during the crisis was pretty strong. In the quarter ending September 2018, that is quarter 2 FY19, which was the beginning of the ILFS crisis. So they reported a PAT of 39.39 crore, year-on-year increase of almost 40%, and the company's loan book grew by 41% year-on-year to 4,625 crores. And their asset quality also remains stable. We can see the GNP at 1.38% and NNP at 0.97%. So if we compare it to the last quarter, it's comparatively better. Only the asset quality, like the NPAs, have jumped a little bit, but it's still doing pretty well compared to a few other NBFCs during this crisis. And yeah, and the next quarter also they have done well. Again, 30% increase in PAT, then 29% in OM, etc. So we've seen this now. So what really what was the impact as such was let's one second. Yeah. So what was the impact of the crisis? Now, financially, though we saw it did not really affect the the PAT or the NPAs. And then what happened was basically the ILFS crisis did affect it in a certain way, but like the impact wasn't it was relatively limited compared to other NBFCs. So ILFS crisis created a liquidity crunch, firstly, in the Indian financial sector, and many NBFCs faced challenges in raising funds and managing their liquidity and solvency. So yeah, so Mass Financial was also affected by the crisis as they had to face higher borrowing costs. Their cost of borrowing increased and reduced investor appetite for NBFC debt instruments. So yeah, due to basically the tighter liquidity conditions that were kind of cause of the ILFS crisis. So they had to raise funds at a higher cost than before. As we see, again, I've taken the same 3 quarters to kind of compare. So from 8.74, and then the crisis happened. It went up, shot up to 8.95, and then it kept increasing during that period. It went to 9.1%. If you see here, FY 2020 was also the consecutive year after the ILFS crisis. So the effects are seen here to 9.32%. It increased. After that, they have kind of managed to bring it down because obviously the effects weren't seen anymore. And yeah, so yeah, this again, their strong ALM framework and diversified funding sources basically comes at play. It helped them manage the liquidity that they needed during the crisis. So moreover, like their exposure to the ILFS group was limited, and they did not have any direct exposure to the groups like debt securities, etc. And they, but like it, the entire situation obviously had a contagion effect on the entire financial sector and the markets, leading to like a risk averse sentiment among investors and lenders, which for which like I've included this graph from screener. I hope it's visible. It's a little tiny, but yeah, in before the crisis, their share was trading at 608 rupees, and yeah, right after like after the news was there in the open, it fell by almost 200 rupees to 415 rupees. So we can see the risk averse sentiment in the market basically. Yeah. So in conclusion, I'd say that the ILFS crisis did affect mass financial, but all like the key strengths of the companies during the period, like such as their conservative lending practices, strong ALM framework, and effective risk management strategies, help them manage the impact of the crisis. And their performance, as we saw during the crisis, was relatively strong compared to other NBFCs, and they continue to maintain their strong credit rating and stable asset quality as well. So, and yeah, the business model, ILFS crisis did not really affect their business model fundamentally, but they did like it did like the entire situation did prompt the company to take some proactive steps to manage the impact of the crisis. As in, they were more focused on on-time repayment, etc. And then, yeah, they became more cautious about their disbursements and liquidity on hand. They mentioned in their report, sorry, annual report, that they learned from the ILFS crisis that that sufficient liquidity on hand is very vital for NBFCs to survive and then later on to thrive and grow. And yeah, there was no change in management during this period. Now moving on to the NPAs, while yeah, so their NPAs are pretty stable, less than 3%. They are increasing, as in the quarter on quarter ratios have improved, but the absolute numbers have jumped at a faster rate than growth. And but they are under control, like because there was the economic slowdown, then the market conditions were unfavorable, and mainly because they cater to lower income and middle income group customers as well, and that is kind of like their main focus. So they cater to like all these entrepreneurs that are transitioning from the informal sector, that and they also like give loans to people spread over rural and semi-urban areas. So this has been a brutal segment, and it was, as we know, like it was one of the most stressed sectors during COVID. So that also has come into play, why a lot of the people could not repay their loans, etc. And also their arm has also grown significantly, so that is also a factor to consider. And one more thing was RBI. In 2021, they basically changed their asset classification and NPA classification norms. And because of that, too, they have mentioned in their press release, the company's press release, that the numbers slightly increased because of the new classification system. Yeah, and then they had also given this chart in their this graph in this histogram in their latest investor presentation. We can see like how they've categorized all the defaulted loans. So anything that is more than so DPD is days past due. So 90, anything that is above 90 days past due basically becomes a stage 3 asset and NPA. So if we calculate here, if we see more the ones which are above 90 days, around the number is around 3%. So they have given those figures as well. And then moving on to their subsidiary, we can see a similar pattern with the subsidiary as well. But yeah, they have a much smaller OM as compared to 7,700 crores. This is 400 crores. So their NPAs are also like increasing, but again under control, let's say. Then yeah, so again I've compared it with some of its peers that are also in a similar. They are in the same industry and lend to similar categories. So here L&T Finance is much larger, and the rest are pretty much in the same bracket. So looking at the GNPA and NPA, They are pretty much in a similar space to its. They're like peers. Slightly, they have slightly higher NNPAs, but again, I'd say these numbers are fine. They're doing quite fine with their NPA numbers, but would like to see how they perform next year. That is FY 24. Yeah, now moving on to their risk mitigation framework, basically. So this is kind of their key strengths. One of the most talked like part in the presentation or con call or even their annual report is their credit assessment system, and how they only give loans to people who will be able to repay them, and how they have a system and a set of regulations, etc., before they lend money. So as you can see here, like a couple, like two-wheeler loans, at least one property, residential or business, should be owned by the applicant or jointly residing family members. For a student applicant, a co-applicant is compulsory. Or for salaried personal loans, minimum required disposable income is a constraint. And then eligibility criteria, they need certain documents, and then job stability, credit history, etc. So they have sets, they have a set of checks that they go through before giving out loans. And yeah, so they have developed customized credit analysis procedures for each product, depending on the nature of the customer, purpose of the loan, and the amount of loan advanced. Their robust and extensive credit monitoring process basically helps them maintain their asset quality throughout different credit cycles. And this is one of the reasons that they weren't like affected during the ILFS crisis. So during my, sorry, okay. Uh, During my research, I also saw like a report from HDFC Securities, in which they also talked about a few. It was released in May 2021. They talked about a few steps that Mass Financials like takes to like to reduce their risk. So the loans to NBFCs and NBFC MFIs are backed by security deposits in the form of cash collateral and corporate or personal guarantees taken by MFSL from the NBFCs and NBFC MFIs. So around 56% of the loan book as of 2021 is to NBFC partners. They have like as of now they have 151 NBFC partners. So what this does is basically it reduces their credit cost and as compared to like direct sourcing. So as of 2021, they had securitized 37% of their book to de-risk their balance sheet, and this basically reduce the risk to the loan book to a great extent, and also increase the confidence of other banks and financial institutes in Mass Financial. So they also entered into, this is also one of their key strengths, their revenue sharing model. So they entered into revenue sharing arrangements with a large number of sourcing partners, where part of a loan default is guaranteed by these sourcing partners. So and this effectively makes them directly accountable for the quality of the loan that they originate. So again, reducing Mass Financial's risk. So basically, they have a diversified portfolio of borrowers within their business segments, and the inter-segment and intra-segment diversity applies to a very large market size and serves as a very potent protection against market risks that could occur due to various reasons. Now moving on to the forensics analysis. So uh, yeah, so they got a score of 87%. They passed 20 of the 23 checks. Pretty high score, I'd say. The Excel file of the checklist is attached here. You can double click on it while not in the presentation mode, and it should open up the file for you. Uh, yeah, so there were three checks which it did not initially pass. So I had to kind of look into it. So firstly, was first one was the auditor quality opinion and compensation. Is the auditor a large well-known firm? So currently their auditors are Mukesh M. Shah and Company of Chartered Accountants. They are very small and not really well known, and they're based in Ahmedabad, Gujarat. So they are a local auditor, and there's high chances that they are controlled by the management. I say high chances because I'll talk about it in the fourth point. But yeah, But one of the things is that they also audit for another big company that is called Zydus Wellness. They are the ones with the who launched the sugar-free product that is pretty famous in India. And then also they have appointed Deloitte Haskins and Sells as their technical advisors. So when I was looking initially, firstly I thought, okay, it's a small company, but they do audit for a another big company, and they also and the Mass Financials also have Deloitte Haskins and Sells as technical advisors. So I thought it wouldn't be much of a concern as such, but then I looked further, and I came to know that B. Srinivasa Rao and Company was their previous auditor in FY 19, 20, and 21, 3 years, and they are based in Bangalore, and they are pretty well known, and they're officially a member firm of KPMG International's audit firm network. So much bigger than Mukesh Shah and Company, whatever. So what happened was when I went through the annual reports in 2021, BSR and Company, they gave them a qualified opinion in their audit report. So previous years they gave an unqualified report, but this year in 2021, sorry, they gave a qualified opinion. And exactly after that, in 2022, you see that they have changed their auditor to this Mukesh and Company, which is a local company, which is kind of suspicious to me. And why they had given a qualified opinion was because basically. Mass Financials have made some changes in their accounting policy on how they are recording their other part, like other non-financial liabilities part, and that change basically it did not follow the Indian accounting standards. So this they have clearly mentioned in their audit report, independent auditors report in 2021. Yeah, so this was a little fishy. And then next was the auditor quality opinion and compensation, which it did not pass initially because has auditor remuneration grown much faster than revenue growth year on year in any of the last 3 years. So auditor remuneration it grew faster in 2021 at 7%, while revenue was down 11.6%. But this was mainly because of the COVID slowdown. So that's why the percentage comes higher when you compare, and so this I don't think is a concern. And then third was the RPT check. Does the company buy from or sell to promoter, KMP, director, control entities? So yeah, so there's these two other companies that I had mentioned in which Mr. Kamlesh Gandhi is a director and designated partner respectively. That is Prarthana Marketing and Anamaya Capital. So also the CEO, Mrs. Pandey is also director in at Prarthana. And so so in the annual report, they have mentioned that in the RPT disclosures that these two firms are a part of the other related parties. Other than that, there's not much info on it. But however, we can like kind of let this slide because both the firms are very small, and the total RPT is 10.2 lakhs, which is a very low amount. So um, I think this is not a concern. So I've not really highlighted it for further investigation. Next, we move on to the key metrics. Mm. Firstly, let's talk about the OM. So has been in the range of 5,000 to 6,000 crores. Now it's at 7,600 crores, growing at like around 32% year on year. But we can see it was growing. If you see the chart before these years, also this is the past 5 years. But if you see earlier, they have been consistently growing their own. And yeah, uh, it did fall down in FY21 to 5,300 crores, but then it shot back up to 6,200 crores. So they were able to handle it, and now they're back on track. And their aim is basically to maintain it at 20-25% CAGR, which they are doing currently. Then we move on to the co-lending on. So the data for this was only available from FY21. FY20, I'm not sure if they did co-lending or did not because there's no mention of it in the annual report. FY21 to 2022, we can see the numbers have gone up by 4%. And in the latest quarter also, they have given an estimate, not an exact number, it's around 20-25%. But they also mentioned that they aim to keep the co-lending on in this range itself, that is 20 to 25%. The book value per share, it has been increasing consistently over the last 5 years, and the company is becoming more valuable. And yeah, the book value is less than the market value per share, which tells us it is not overvalued. These are the same things I've put notes here. Next is, yeah, GNP and NPA. We already talked about it. I've said it's pretty stable. So let's move on to the ROA, ROE. So the ROA, ROE numbers are doing fine. Yeah, obviously it was at around 19% and 3%, and then it has kind of gone down since then. Um, but that was mainly due to the economic slowdown. That's what they had said in 21. But in 2022 also they have not managed to bring it up. But now they have mentioned that they plan to, like, they are looking forward to increase to 18 ROA, to increase back to the 18% levels, and ROE to increase back to the 3% level. Next is the pure comparison again, the same four companies. L&T Finance is a little bit larger, rest all are in the same bracket, so we can look at those numbers. GNP and NPA we had already compared, so I wouldn't go into that. uh, and in terms of the ROA, ROE, Mass Financial is actually doing comparatively better in terms of the ROE numbers, and they're doing fairly well with the ROA numbers. And then next is the P by BV ratio, that is price by book value. So the company has been around for like 28 years now, and they are valued at sorry, they are P by BV is at 3x currently. Five stars is at 4x, and then Capri Globals is around almost 7x, and L&T and Spandana are at 1x. So I want to kind of see now, like, how do they plan to grow from more than 3x to increase it to 4x or something. And yeah, I mean, they have mentioned their plans, but like, it'll be interesting to see their growth and how they outline it further. So now coming to their future outlook. So OM growth, again, they have registered a 30%, 30% plus growth in OM. Housing finance, that is MRH, MFL, they have touched 400 crores in OM. And then the CAGR again 20-25% within 3 to 4 years. And then also Mr. Kamlesh Gandhi said, they aim to achieve a norm of 10,000 crores in the quarter 3 or quarter 4 of FY24. So so like soon their subsidiary, that housing finance subsidiary, will also like contribute meaningfully towards the entire OM. And the economy is also back on track now, kind of. So there's like a strong opportunity for them to like go back to their consistent growth rates, and that they have been like performing since the last 2 decades. They are again, they are confident about. They've said that they are confident about their OM growth, and they plan to double it. And because their profitability and asset quality is growing at a rate of 20-25%, so within 3 to 4 years, they say that they'll double their OM. And yeah, in the past they have had a good track record. They have shown consistent growth. So I'm pretty sure the growth will be seen in the next few years. Yeah, sorry. So branches growth. Currently they have 7,900 centers, 149 branches and partnerships with 151 NBFCs, and they plan to reach around 200 branches and potentially 10,000 centers within the next 2 years, depending upon the opportunities that come across. They have been continuously increasing their branches, and this has also been increasing their OPEX. Business units. Uh, so the company is more focused on steady growth across all their business units rather than expecting any particular unit to like outperform. So they've seen growth across all of its own products. Like I said, their current term is at 7,606 crores, and micro enterprise loans have increased by 32%, and then SME loans have grown by 25%, and two-wheeler loans have grown by 38.22%. So yeah, and um, yeah, this would be their way forward. They want all their segments to perform well, and they also launched the new segment, which is also doing fairly well. So their way forward would be basically they want to serve a new set of customers within their existing products itself by using aggregators to have direct access through banking, GST, and credit bureau data. This will help them like analyze borrowers faster and make better credit decisions with the help of like AI, etc. And then they also, that this was mentioned in their con call, by the way. So their like focus is to grow their ROM again anywhere between 20-25%, and the disbursements will also grow accordingly. And they plan to like achieve this growth by expanding their presence in the existing markets and exploring new geographies as well. Yeah. So yeah, they have also adapted. These are two snapshots from their latest investor presentation. They are also adapting technology. They're trying to keep up with time, like eKYC, then digital signatures, cashless, then income analyzer tools. So they're also adapting technology in their credit assessment system, etc. And again, co-lending also they began with their partnership with Bank of Maharashtra and Bank of India, etc. Um, Now moving on to what they do differently. So they have their unique and robust distribution. These are like their two key strengths. That something they like, and I'm not saying other NBFCs don't do it, but they have a slightly different approach to how they go about it. So the company has several advantages, including a successful track record, high capitalization for future growth, strong provision buffer, and portfolio quality, and a robust liquidity position. Their advantages include efficient last mile delivery of credit across its product range, better quality of intermediation with an advantage of adequate capital base, along with better understanding of the operations and demography. So last mile delivery of credit basically refers to the process of providing credit to the end borrower, who is typically, in this case, like in their case, is located in remote or hard to reach areas. As we know, they serve like to the most unserved areas. And in the context of the company's distribution network through NBFC partners, last mile delivery of credit refers to the efficient and effective delivery of credit to customers located in such areas through their network of these 151 NBFC partners. So this approach basically enables the company to reach a wider customer base and provide credit where it's due by extending credit with deep penetration and understanding. Better quality of intermediation, it refers to the company's ability to provide better services and support to its customers through its intermediaries, such as their NBFC partners again. This is like they achieve this through an advantage of adequate capital base along with better understanding of the operations and demography. By having a better understanding of the local market and the customer needs, the company, they basically can provide more tailored solutions and support to their customers, and which will like basically result in a higher quality of intermediation. Then second is their revenue sharing model, which is pretty interesting. So revenue sharing model, it enables them scalability of the relationships where the operational cost and credit cost to be borne by the partner NBFCs is considered. Like I mentioned earlier, this is like one of the factors that reduces their risk as well. And the company widens its network while maintaining a relatively lower risk profile, and establishes knowledge partnerships to increase its local market knowledge. In the context of the company's like distribution network through like the 151 NBFC partners they have, the revenue sharing model basically refers to an arrangement where the operational cost and credit cost is to be like borne by the partner NBFC. And this basically ensures one, that is scalability of the relationships between the company and the NBFC partner, as it like enables them to share revenue that is generated from the entire business. This approach, secondly, also helps them in establishing a mutually beneficial relationship between the company and its partner NBFCs. So these are the two key differentiations, I'd say. Other than that, in the annual report, they've also given a few other things. They mentioned a few other strategic advantages. Uh, but these are also, again, correlated to these two key points, I'd say. The vast market opportunity, again, they lend to low and middle income households and people who like have recently started their businesses or are moving out from in the informal sector. Again, this can only be done because of their unique and robust distribution network and all their partners, centers, etc. Again, wide and deep pan India reach, again, unique and robust distribution network. Then robust liability management asset creation. I've talked about this. Their strong ALM framework, credit assessment system, which keeps them safe and going. A broad spectrum of loan products. Yeah, again, like they are trying to grow and expand. Like they have recently launched the salaried personal loans, and then people centric approach. Like I said, their business model is entirely more customer centric than local partnerships. They have 151 NBFC partners. That's how their revenue sharing model works. Yeah, with this, I'd like to close. Thank you so much.
Thank you, Shantanu, for that lovely presentation. I mean, I really enjoyed the presentation. Very well presented. I think you've done, this is your third presentation, I think.
Yeah,
And the quality of presentation, the way you spoke, the preparation, and more importantly, the number of hours that you put into actually analyzing the company, everything was very, very clear to people who listened. So many congrats, Shantanu. This level
thank
of
you so
presentation
much.
is really, really good.
Thanks a
Uh,
lot.
I mean, you are learning this sector. All of us are learning this sector. So certain things you've picked up very fast. There are some aspects on which I had a
Yes.
further few questions where you were mentioning something in my mind because I have spent some more time than you on NBFC.
Uh,
So I could ask generate two three more questions, but that I am 100% sure it will come with if you spend some more time, and
yeah.
which is what we are going to do. So my feedback is I really thoroughly enjoyed the presentation, and especially the point that you picked up about the past auditor,
Hmm.
and the fact that they had given a qualified opinion from an FY21 report. So that means you really did the work, and the spirit of the forensic analysis, you got the spirit and you implemented it in your analysis.
Thank.
So I mean, I can't be more happy than this because that was the intent of teaching all of you how to do forensics, right?
Yeah.
So great job, Shantanu. I mean, मेरी तरफ से और कुछ नहीं बोलूंगा मैं ज्यादा. I
Thank you.
don't know if you were able to see the message. Gaurav had to leave because he had a
Okay.
hard stop. So I think he left about half an hour back. So he will listen to the recording.
Okay.
And he also liked the presentation a lot till the point he heard it. He'll give you further feedback offline.
Sure.
And I will also not give you feedback right now
Yeah.
because we're already at 8 p.m. So what I'll do is I'll write up the feedback and send it on the group. Okay. Some of
Absolutely.
it will be general feedback and some of it will be specific to this company.
Okay.
Okay.
Yeah.
So Kunal, Rishikesh, what about you guys? Did you guys enjoy the PPT? Any questions, feedback?
Mm, no, it was very good. We can
Yeah, the
clearly
PPT
see
was
the hours he put into that analyzing the company. It was
Right.
great.
Thank you.
I agree with you, Rishikesh. Yeah, Kunal, sorry, you were saying something.
yeah, the PPT was very great. Right.
Thank you, Kunal.
Awesome. Awesome. So I think you've set a great standard, Shantanu. Yours was the first presentation. You've set a great standard. Now, this is the point of all of us analyzing a sector together so that
Yeah.
we can learn from each other. I'm sure that Kunal, Rishikesh, Bhavna, Tanvi, Pranav, when they do their PPT, they will be able to take elements of from your presentation. So,
Yeah.
Shantanu, I would request you to upload this presentation on the NBFC workflow. Yeah.
Okay.
So where the table is there for Mass Financial, the
Yeah.
detailed table where you double click and enter the database, there you can upload it. Okay.
Okay. I'll do
So
that.
that if these guys want to refer to, the way you captured some data or way you spoke about something, they should be able to do it. And so just to set the broader context, what we'll do is out of these 20 companies, we'll pick up 5 or 6 such companies
Ah,
where we'll do one more step of exercise. Okay. So
okay.
where we'll try to now project 3 years out based on their con call commentary, based on brokerage reports. We will try to project their figures like their what can be an expected AUM range, what can be an ROA, ROE kind of figure, GNPA and NPA. We'll try to value this company.
Yeah.
So once that is done, that bit of analysis, that closes this company's research from our point of view, and this research gets filed.
Okay.
So we are then in a position to sort of publish this research, because that sort of, we have covered everything from management quality, history, everything. And then we go ahead and sort of try to project how the company is going to do. Right, Shantanu? So
Yes.
the next step will be that. So for that, we will connect separately once the first round of PPTs are given by everybody. Okay?
Yeah, sure.
And you're on leave for the next 3 days, I think.
19th and 20th.
Oh, you're not on leave this week, is it?
This week I'm not on leave. I'll start
Oh,
working in the next company. But
Oh.
presentation I'll have to give after.
Yeah, that's fine. So from 18th to 20th, you're on leave, is it?
Yeah, 3 days
Okay.
in Gujarat.
Got it. ठीक है, Shantanu. Again, thanks for such a great presentation. All of us had a great time. Yeah, we'll connect again tomorrow.
Thank you so much.
Okay, guys. Bye, Kunal. Bye, Rishikesh.
Bye.
Shantanu.
Bye.
We'll connect tomorrow. And Rishikesh, Kunal, I'll drop some feedback for Shantanu, in which I will also cover a couple of points for the other presenters also. So since you guys will be presenting tomorrow, you can just check those 2-3 points and make sure that's incorporated in your PPT. And one request, today, since Shantanu alone was presenting, we could overshoot the time a little bit. Tomorrow, let's try to keep our presentations to 45 minutes each. Okay. So, I mean, sharp at 7, Rishikesh, you can start. From 7 to 7:45, we can have your presentation. Kunal, exactly from 7:45. So actually keep it 40 minutes, Rishikesh. Plan for 40 minutes so that, after feedback and handover. Yeah, Kunal can start exactly at 7:45. So just do that practice so that we don't overshoot time tomorrow. Okay. Okay, guys. Take care.
I
See
think
you
the
guys
recording
tomorrow.
is still on.
Oh, recording is still on. Yeah. I'll stop that. We can edit this part.
Yeah. Okay. Thank you.
Yeah. Thank you so much, guys. Bye.
Bye.